Hello, let's cover NVEC. This is the chart since the IPO, which was back here in 95. The stock had this nice rise here, but then it fell back to almost zero. Another ascending trend here in 2003, and again to almost to between $5 and $10, and it is now at well, not 34.14. It is less than that. It is down a bit today. Just a second. It is what, at $34.08 now. Okay. Well, this is the medium term chart. The trend is still bearish here over the medium term, but well, the stock is trying to come back after this ugly fall here in late 2006 and early 2007. Here's the short-term chart. Well, this is the short-term support, currently around $25, and short-term resistance at about $42. This is a symmetrical triangle formation here. Here on point 1 we had calendar fourth quarter earnings, and the market didn't like those, but this was a nice buying opportunity here since the stock started rising again. And here the first quarter calendar earnings were nice, which is the fiscal fourth quarter for the company, and annual earnings. The market enjoyed those, and the stock had this big gap up here. This is about 160 million market cap, so very small cap. Let's move on to my valuation model. Okay, sorry, the share price is around $34 now. There are 4.62 million shares outstanding. I expect this share count to increase about 1% per year, just that, because the number has remained stable lately. Let's check that here at MSCN. Look here, 4.6 million shares for the past 3 years, and the balance sheet is very strong. Current assets 25 million and current liabilities just 1 million, so the current ratio is about 20. Very high, very healthy balance sheet, although small, of course, because this is a very small company. Okay, with 1% dilution we'll have 4.8 million shares outstanding in 2009. And fiscal 2006 or 2007, just a second, fourth quarter and fiscal. Well, this is, yes, fiscal 2007 just ended, and the company has 16.5 million in revenues. I expect these revenues to grow 17% a year for the next 3 years, which gives me a 26 million revenue number for 2006. Analysts are expecting 20 million for 2008. Let's check here analysts' estimates. Oops. Okay. Yes, they're expecting 20.55 million for fiscal 08, and I say 26 million for 09 seems reasonable to me. This means a 17% revenue CAGR. And net profit margin in this latest year was 29%. I expect this to remain stable going forward here at 30%, which is a fat net profit margin. It is interesting. And this leads me to a net income for fiscal 2009 of $7.9 million and earnings per share of $1.66. If we apply to this the industry average earnings multiple, which is 27.46, this tells me the stock will be at $45.62 in 2009, and the share price CAGR is 10.4%, and I don't consider this attractive because I look for at least 16%, so 10.4% is about the market average, just above the market average, and I'm looking for more than this, more than 40%. So Not attractive. Although I think the stock will rise, but not attractive to me. Thanks. Bye.